So let's start with Bill. And Bill, why don't you talk to us more about the new trade of the decade that you recently spoke of, and let's discuss that.
The question is about what the new trade of the decade is. But I need to explain that trade of the decade is not predictive. Well, I'm not saying I think anything is going to happen in particular. It's merely designed to catch the difference, the gap between something that's very overpriced and something that's very underpriced, and without really caring what happens. But today, in fact, I did this about 2 months ago, came up with the trade of the decade for the next 10 years, and in looking at that, I did not choose gold as the on the buy side, because gold is not underpriced. It's really fairly well priced right now. And a guy named Jastrom, I think it was, he wrote a book called The Golden Constant. And he showed that gold prices do not move very much, that in terms of what you can buy with gold, they are always, and always have been, about the same, that you could buy about the same amount of stuff with gold in the year, say, 1200, as you could in the year, say, 2005. So when I looked at the present price of gold, it does not look too cheap in terms of what it will buy. So therefore, it does not qualify for a trade of the decade because it's not very, very undervalued. In fact, it's hard to find something that is very, very undervalued because everything is fairly well priced or overpriced. But what I came up with on the buy side was Japanese small stocks. And the only reason is not predictive about what I think will happen in Japan, because I have no idea. But those stocks are very, very cheap. And you can buy a Japanese company, a small cap Japanese company, for less than the amount of cash that it has in the treasury. That is an extraordinary thing, and that's what we look for in the trade of the decade. All I'm saying is most likely those things are not going to be so cheap 10 years from now. Now on the sell side, the most overvalued thing that I found, I could say were two things. One is Japanese bonds, which are very overvalued, but even more overvalued as an asset class are American U.S. Treasury bonds. You know, they've been going up more or less for the last 27 years. They hit a low in 1983. And so given that all the other things going on in the world, I would guess that U.S. Treasury bonds are a good sell. So sell Treasury bonds, buy low cap Japanese shares. It's a good trade. I don't know what will happen, but it's a good trade.